Hello viewers, we'll be going over boil and cold. In this video, we'll be going over my trade idea of the week and how I developed my trade idea. So let's start off with the technical analysis. Boil closed below 8% today on the 1 hour chart. We are nearing oversold RSI. We have now approached to negative MACD. If we extend that further onto the 4 hour chart, what we have here, we rested temporarily on the 150 moving average, this orange line, and we start to see a divergence. We may continue to see downward momentum, and on the daily chart, what we have here, these lines are my positions for my trade entry on a long position for boil. So what we have here is I'm using a size of less than 1% of my portfolio, and for entry onto boil, I'm entering at around $24.53, around this range, where we made temporary support back in July 22nd, and I'm going to sell it at $34.33. So much higher, fairly close to where we are encountered resistance back in July 7th. And my stop loss for my long position will be around $22.19, and that is slightly below where we made all-time lows for boil. So now as for cold, what we have here on the technical analysis, we close above 7.1% today, and on the 1 hour chart, we started to see it approach to positive MACD. If we extend that further onto the 4 hour chart, we see a slight convergence in play. We have not quite reached oversold RSI yet, and if we expand out to the daily chart, we are resting on the 150-day moving average, this red line right here, and these lower and upper ranges are the entries and exit for my short position for cold, or my long position for cold. My entry for cold will be around the price of $43.14. That is around this range right here, where we encountered temporary support that dated back to, say, May 4th. And my exit for a cold position is around $61.89. That is fairly close to where the 9-day and 18-day moving average, the blue and purple lines respectively, that is where I plan to sell that position. And my stop loss for cold will be $37.86, so slightly near the levels where we made a 1-day temporary support back in May 5th. So how did I develop these trade ideas? So the ranges in bullish and bearish ratios come from the day-by-day probability model of UNG, which is the underlying asset for cold and boil. So as we progress to the 5th day, we have a, say, 47% chance for natural gas to fall between 0 to negative 11%, and a 7% chance to fall between negative 11% to negative 22%. And to the upside, a 47% chance to climb between 0 to 11%. So in this model, we went over boil and cold. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.